Good morning, my name is Karen Jones, Content Editor for the Society of Technical Analysts, and today I want to be talking about the US 10-year yield. But before we start looking at what's happening currently, I just want to show you this very long-term chart of the monthly. Now, the reason I wanted to look at this is because I wanted to show you the convergence of long-term Fibonacci and other resistance around the recent high that we have seen on the market, which is around 424. Now, this level here is the low we got back in 1998. This level here is the peak we got back in 2008. This is the long-term Fibonacci extension coming from way back, but you will notice that it actually caught the low pretty well. Let me just zoom that out so you can see that. It's coming from this old highs way back in the 80s. And we did a Fibonacci projection and we came up with that downside target. So we left it on there. It's an old Fibonacci. It comes in around 419. And in addition to that, we have the 78.6% retracement of the move down from 2008. It's all coming in this area, and that is where we have stopped almost exactly. So that convergence of Fibonacci and other levels has been really critical. Let's have a look now what is happening. I think you can see from the daily chart that it is struggling, and we are currently in the process of eroding not only the low we got back in January at 332, but also the low we got at 329. So quite a lot of support there is currently under threat. And should we see a close below these levels feature today, that is going to be a Friday close or a weekly close below that level, which will leave the market staring down the barrel of other more important support levels. So if we just zoom this out slightly, I think you can see from here that we've got this old 2018 peak coming in around 325. So you can see there we're also sitting on the 55-week moving average. So that's also in and around this 325, 332 area. So really big levels we're looking at today. And should a close below there be seen, it is going to leave this market vulnerable to a bit more of a correction lower. Now, where's it likely to go? Well, 3 would be an obvious psychological target. But when we look at the monthly chart again, you can see that the Fibonacci retracement of this whole move up from 2020 is coming in around 280, and I'd make that probably a downside target for that corrective move. So just bear in mind that up here we have failed at some really decent resistance, and we are in the process now of correcting lower, and we're right on the cusp of these key levels, 320.25 to 332. They are looking quite vulnerable, and should they go, I would allow for a move down to 3 and possibly 280. Thanks very much.